If the Federal Reserve had set out 2-3 years ago with a goal of hollowing out the middle class and thrusting most Americans into poverty, I am not sure they could have done a better job of it if they had tried. A recent survey showed that 2 out of every 3 Americans could not cover a $400 emergency right now. Now, there are differing opinions as to what to do about this. There are some that I'm going to show you inside the Fed saying that inflation and deflation are monetary phenomenon. We've been ignoring the money at the Fed. We need to focus on it again. I think that's probably step number 1. But we're also seeing people on the other side of it saying that what the Fed is doing right now by raising rates and trying to pull back on their inflationary policy, that's hurting the poor. The reality, as usual, is a bit of a mix of both, because if you inject trillions of dollars into an economy and cause a boom, then when you start to cause the bust, who do you think is gonna get hurt the most from both sides of that? The boom is gonna benefit the rich and hurt the poor because people can't afford to just have their groceries and have their bills go up and up and up and up if they don't have a bunch of assets. So the rich who have the assets can absorb that blow, not the poor. And then who do you think is gonna get hurt the most when everything starts to crash? Well, again, it's probably not going to be the people who own the majority of the assets. It's gonna get people that are getting their wages cut, getting their hours cut, getting laid off. And that's why 2 out of 3 Americans right now can't cover a very, very small unexpected expense. Because when the Fed decided to print trillions of dollars, there was an unprecedented spike in the US savings rate between cash out refinances, just regular refinances, and people buying homes with record low mortgage rates, and then people getting stimulus checks and people getting those child tax credits, those advance payments. Between all of that, people had a lot more cash on hand than they normally did. And so the savings rate skyrocketed. But as Americans do, they decided to spend it, which has caused that personal savings rate to plummet beneath levels that it's ever been before. Like I said earlier, there are 2 sides to this coin, and some at the Fed are now recognizing that they had a hand to play in the inflation by printing money. Shocker. As Michael Derby from Reuters reports, the inflation roller coaster is prompting a fresh look at the money supply. He points out that money supply purists, some would probably label me a money supply purist, argued that the country's growing supply of money was an inflation powder keg. Now, the caveat here, which is always there, is the phrase all else being equal. Because if the stock of wealth, the total goods and services, let's just say the economy, GDP, if that doesn't change, but you blow up the money supply, prices are gonna go up. More money chasing the same stuff. It's an auction. That's how it works. The other way around, if you decline the money supply, let's say by half, and you have the same amount of stuff, well, guess what? Prices are gonna drop. That's a deflationary bomb. Which is why people in charge of monetary policy largely ignored the amount of money that was being printed for a long time because we had productivity rising. We were increasing the amount of stuff that we had, the amount of wealth, at roughly the same pace as they were increasing the amount of money there was. So relatively speaking, there was really not a lot of change between the total amount of money and the total amount of stuff. Both were growing. The money was growing a little faster, which is why we had a little bit of inflation. And many of you know the official inflation numbers are wildly understated, so the real inflation numbers were higher than what they think it is. But even still, we had a growth in stuff and a growth in money, so inflation wasn't out of control. But obviously, when you blow up the money supply like this and print trillions of dollars in such a short amount of time, there's absolutely no chance that productivity keeps pace with the increase in the money supply. So the result is going to be inflation. This is not rocket science. The president of the Federal Reserve Bank of St. Louis admitted this, saying that the money supply exploded during the pandemic. Inflation is a monetary phenomenon. When you get a huge movement in money, you do get the movement in inflation. So absolutely, they caused the problem that is causing most Americans to not be able to afford their daily cost of living right now. But the other side of things is just as bad for most Americans. As things are coming down right now, new Fed paper is arguing that now the higher interest rates are also increasing the wealth gap. This is largely due to the effect on mortgage rates. It argues that monetary policy that is easy with low rates allows certain people to purchase assets that otherwise wouldn't be able to. Now, this completely ignores the fact that without all that money printing and prior easy policy, prices would be much lower, so you wouldn't need rates to be so low to make that huge pile of debt affordable in the first place. Nonetheless, the bust is going to hurt the people who are vulnerable the most, which is the same people that the boom hurt the most, the poor. Now, contrary to the advice of somebody at the Fed who's completely insulated from the economy that they made so dangerous for most people, their salaries never change, their bonuses never change, their free paid lunches never change, their hours never change. They are isolated and safe and secure from the economy that they are actively controlling and controlling poorly. So it's not a good idea to get loaded up to your eyeballs with debt in order to deal with the inflation that they've caused by money printing. You know, I've long been an advocate of putting some of your money in precious metals like gold, even some in Bitcoin, in assets that are scarce, because when things are scarce and money increases, just like we talked about earlier, the price gets pushed up. It's all an auction. This happens every time throughout history. When you watch the failure of a currency, it's volatile, but prices on average go up. That's why most currencies have lost over 95% of their purchasing power since inception. Having your savings in scarce assets like gold and like silver helps you preserve your purchasing power so that when you need to buy something, you can buy the same amount of stuff that you could when you initially saved your money. Now, with gold and silver, many investors make the mistake of thinking, oh, I want to invest in gold and silver, so I'm going to use my 401k and I'm going to go out and buy some mining stocks. Those are two very different things. Physical gold and silver are there as savings to preserve your purchasing power. A mining stock is a stock and you have to view it as such. It is a business that carries risk and reward, potential reward. Your purchasing power will largely stay the same with something like physical gold. With a company, you are taking risk in order to increase purchasing power. Now, Prismo Metals is one of these companies that I own. They've sponsored today's video that I think has the potential to massively increase purchasing power. Whenever looking at stocks, specifically mining stocks, there are two main things that you want to look for. Number one is the leadership team, and number two is who is investing in this company. If you get those two things right, those are massive pieces that give you much more likelihood of success if you can get those two pieces right. Prismo Metals is right now a very small company, tiny market cap. Even so, they have a high degree of insider ownership of their shares. That's a good sign. The insiders believe in the company enough to own the shares, but it's not just the insiders that we're concerned about here. One big sign is external investors. In this case, Vizsla Silver. Vizsla Silver is a company, massive silver company with a $379 million market cap. Between shares and warrants, they've locked up $5 million worth of investment into Prismo Metals. It's key to understand that this investment was made at 50 cents Canadian, which means that with a massive company like this, with all the research that they do to decide when they're going to invest a large amount of money in a small company, because they think that at that price, it warrants a large potential upside compared to the potential downside, you could currently get this at a discount to what the big boys are buying it at. Just like always, keep in mind, this is not investment advice. I'm not making any trade recommendation. These are simply things I look for when I buy stocks. So the question is, why would Vizsla Silver invest so much in this small Prismo Metals? Well, because they literally surround the area. This light blue area on the map is Vizsla Silver, and this little purple spot on the map is the Palos Verdes property that Prismo owns. So Vizsla's right there, and they wanted access, they wanted exposure to this property here, which they get through Prismo, because they know what's in the area already. Now, leadership is also a huge deal, and I want to focus on this guy right here, Dr. Peter McGaugh. If you've never heard of him, he is basically the name in this space. He is credited with discovering major discoveries. He is like a celebrity in this space. Just Google him if you want to know more about him. When his name is on a project, that is a big deal when he gets interested in something. He's the co-founder and an advisor here. As if that wasn't enough, I do need to tell you about some news that just broke for Prismo Metals, they just acquired a copper property in Arizona. Now, this is hot off the press, this news. Why this is significant. Number one, 68% of all the copper in the United States comes from Arizona. And the property that Prismo is able to acquire here, the hot Breccia property, is located right in the same belt where most of that copper comes from. If you take a look at this map, you can see that the hot Breccia property is located literally just a few kilometers away from Christmas Mine. Christmas Mine produced 1.7 billion pounds of copper. Not only that, but the infrastructure is obviously fantastic. Right next to a few big cities, airports, roads in the area. This property is located right next to the smelter. Fantastic infrastructure. As the cherry on top, this property was handpicked by Peter McGaugh. This is, again, he is a celebrity in the space. He knows what he's doing, and this property was handpicked by him. This news is hot off the press. And just in case you guys are interested in the financials, this company is cashed up. No dilution coming down the road. They got $5 million in the bank, and they are fully funded for drilling into 2024. So between big ownership by insiders, the team, including Dr. Peter McGaugh, huge name there, the properties that they own, the one that they own in conjunction with Vizsla Silver, the investment from Vizsla Silver for the property that's right inside their own property, and then finally this brand new copper project in Arizona. This is a company that I really like. Not investment advice, not a trade recommendation. Do your own research. As always, really appreciate you guys. Thank you so much for watching. Have a great day.